You don't have a big credit problem. You don't see recession on the horizon. You see stress in the bottom quartile of consumers, certainly. If you look at the numbers from the FHA for low-income households, they're pretty bad. We're up in the low teens in terms of default rates. The rest of the complex of consumers is fine. So if you're the Fed, you're not feeling great urgency to cut. It's not like 2020 when everybody fell off the edge of the table. But I think that there is a lot of confusion in the data. The big thing they worry about, by the way, is liquidity. They still don't have a way of accurately measuring liquidity. It's just a fact of life. They try and measure the liquidity needed in the system based on GDP. They use a model that Bill Poole from St. Louis designed years ago for very short-term liquidity needs, and they use it over a period of months and years. So, they're flying blind. And I think that's the big worry for the Fed, is making sure that we don't repeat December of 2018, because that was bad. I think that's a good old-fashioned Republican agenda, and I'm glad to see them leading with the deficit. This system is tuned up to finance $1.5 trillion worth of new paper from the Treasury. If you cut the deficit, if you show the right movement in terms of getting the government under control, and just, I think, in general, having better governance for the United States, and we saw under Joe Biden, the rates are going to go down. The capacity in the market, the demand for risk-free collateral, not just currency, mind you, but risk-free collateral for financial transactions is still vast. So if Treasury got the deficit down to $1 trillion, rates will fall. That's how Donald Trump gets interest rates to fall. He doesn't have to jawbone the Fed. Just work on the deficit a little bit. Turn Elon Musk loose in the defense sector, right? You know how much waste there is in defense. There's got to be a couple $1 trillion there. With all these offshore operations and wars and yada, yada. The U.S. has been spreading money around, going back to the original 9/11 attacks. Trillions and trillions of dollars. It's been like a new Marshall Plan. And I think if you get that under control, you get the deficit under control very quickly. This economy grows. If you do 3% growth, you'll have higher growth in revenue. Your first objective is to slow the rate of growth. And then you have to start really figuring out how you either raise revenue or cut spending and start to run a slight surplus. But that's a long way away. If they can just get the horses under control, that's really step one. It's doable. Americans have been having a party for years. We didn't want to deal with this. I can't remember the last time the Senate actually passed a budget resolution. It's incumbent on everyone to focus on this. They want to spend more money. They want to work harder and make money. Pumping oil, obviously, is very attractive. I think that's a very interesting gambit by Trump, because what that says to Vladimir Putin and the Saudis and everybody else is that we're going to bury you in oil. If we drive energy prices down, you can break all of those constituencies and get them to behave. Iranians, same thing. All of these are commodity exporters, and if you force the cost of energy down, you help American consumers and obviously the economy. But it's funny, energy prices have been the real positive in terms of American inflation going back 30, 40 years. It was really 20 plus years in the early 80s to the 2000s. Energy prices were falling. So that was always a benefit to the economy. We haven't had that so much in the last 4 years because the Democrats deliberately pushed up energy prices. Here in New York, the Democrats thought it was helpful to push up energy prices. That's one of the reasons they did so badly. When you see Bitcoin at 100, that's my favorite inflation index. That tells you just how much people are looking for alternatives because they don't trust the ability of the dollar and even, the nominal yield they get in their bank account or on their T-bills to protect them from a loss of purchasing power. That's really what that says. Energy prices falling will help inflation, but inflation is embedded in this system. 4 years of crazy spending, quantitative easing by the Fed, a whole raft of things that we've done really in reaction to COVID has enabled prices, for example, for homes to keep rising. The Fed would probably have to push mortgage rates up to about 10, 12% to get home prices to fall. Mm-hmm. The last time you saw that was Paul Volcker. Fed chairmen have been afraid to do that because they don't want the market to implode. They don't want deflation. It's going to be interesting. I think the tariffs with China are a given. Lighthizer going back to the U.S. trade rep. and just the whole team they put in place there. It's going to be very much about enforcing the sanctions and continuing to get tough on China. I don't know how you change that because China is so explicitly mercantilist in their policies. They are a predator state when it comes to trade and finance. So I think the U.S. unfortunately has no real choice. And then the U.S. is going to be beating up the rest of the world on sanctions against Russia over the Ukraine thing in the Middle East. It's going to be more of the same there. Trump is much less prone to war. You don't have Victoria Nuland and all of these neocons that were working for Biden in the Trump group. And even the pushback you've already seen on his choice for intelligence, that tells you that there's going to be a lot of fights on the Hill because the defense community has a number of sponsors, both in the House and the Senate. And they're going to push back when Trump is trying to downsize the military, reduce the number of engagements around the world. It's going to be very much of a clash of values, I think. And not good for defense contractors, definitely, in terms of earnings. And then you're going to have Elon Musk looking for, fraud and abuse. So we'll hear a lot about that. That's not going to be particularly good for stocks. Well, there may be some things that are privatized. Student loans. You may see an end to federally guaranteed student loans and see them turned into a private market. I'm not sure that's going to work, but, they would like to get rid of the Department of Education. I think for the banks, it's going to be a big positive, much less regulation. Same thing for the mortgage space. Some of the leaders in that market are going to be much better off in terms of just expenses dealing with regulators. The states are still there. You still have states like New York, which are a pain in the ass. But, I think overall financials are going to get some lift just from getting away from the inquisition that we had under Joe Biden. I mean, the Biden people in housing and at Treasury were quite pathetic. I think you're going to see the Republicans try and get rid of that agency, by the way, and make some serious changes in the regulatory environment. Basel for the banks may go bye-bye entirely. Imagine that. It had run up a bit, but it still has a very muted trading pattern because most people don't think about gold. Most people are looking at things that move more, the shiny object. And I think that's really the story with Bitcoin. Bitcoin, since we have ETFs that are onshore here in the United States, it's going to trade more like a traditional speculative asset. Whether or not the connection between the ETF and the actual Bitcoin market, wherever that is, right, is accurate or not doesn't matter. It's taken on a life of its own. For better or for worse, it's going to be there. I don't expect to see them declare Bitcoin legal tender or anything like that because I don't think they could get that through the Congress. But certainly it's a more friendly environment. But you know what? Next time there's another scandal or another fraud prosecution involving cryptocurrencies, it'll go down. The big problem with crypto is that if you touch the actual crypto asset itself that's traded offshore, you almost immediately get into problems with FinCEN, know your customer, all of this stuff. And people don't want to be involved in that. If you're in the United States, you've got to be totally on the grid. But the point is that when people outside the United States can trade it, you have a problem. Almost by definition, because if you can't validate who you're trading with, you may get a call 3 months from now from the guys at FinCEN. I just had to do my little declaration for my LLC. Everybody in this country has to file a form with FinCEN this year to tell who the beneficial owner of a corporation is. Everyone. And there are serious penalties for not filing. So the government is focused on this from a bureaucratic perspective that really is beyond politics. And I think, people in the investment world have to be cognizant of this. And, I'm a member, affiliate with a broker-dealer. And I got to tell you, if you are even trading cryptocurrencies, it's a flag for the compliance department. They want to come and talk to you. I think gold is going to come on because the Asian countries aren't going to stop buying it. The Russians certainly aren't going to stop. And I think the Treasury ought to be exchanging paper for gold. It's obvious. Why wouldn't you sell fiat dollars and buy gold? To me, it's the obvious trade. So I think medium term gold is actually going to be quite interesting. You may see the Fed pushed into putting part of its reserves in gold. And frankly, they would do a lot better with that than they've done with their securities portfolio. It's just choice on the part of each country. Most of them like to have liquid tradable assets that have a yield. Gold is the only form of money that's not debt. So it doesn't have a natural yield. It just sits there. Yeah. But the accretion in gold is interesting because there's continued commercial and other demand, especially in China. The financial problems in China have made local gold volumes surge because people are afraid of what's going on in the property market. They want a place to hide. There aren't too many sectors of the Chinese economy other than housing where individuals were allowed to play.
Yeah.
So gold, physical gold, is actually a nice hedge, especially the smaller denominations, smaller coins, smaller bars. They're very popular. Oh, yeah, definitely. For monetary gold, you want a central bank like ours who's going to keep it for you for free.
Mm-hmm.
But no, I think it's symbolic. And frankly, I think gold is dramatically undervalued. If I were at the U.S. Treasury, I'd be buying gold until I got it up to $100,000, because I think the rate of inflation in the U.S. since Roosevelt's arbitrary peg at 35 has been much, much higher than the price increase in gold. I think the individual is confronted with a great challenge as we go forward in this century, which is you need education. You need to really be aware of your surroundings, what's changing and what's not. And you have to be flexible. You have to be ready to remake yourself multiple times during the course of your life. So you want to start with skills, and you want to be as open and as, I think, discerning as you can about where to spend your time, because whole professions have disappeared. You look what's going on in the auto sector globally now with volumes down. When they get rid of those jobs, they will replace those people with machines. And I think that's the big challenge for the future. The traditional labor business case is going to have to become more of a technology-based role for people. And I think it's going to be very challenging as we go forward.